And joining us to discuss is Jeff Dorman, Chief Investment Officer at Arca, a California fund manager that earlier this year launched a Bitcoin trust for accredited investors. Welcome, Jeff.
Hi, thanks for having me.
Good to have you, Jeff. What do you make of Bitcoin's sluggish activity lately?
Sure. I was smiling while you were showing the charts there because I think a lot of the assessment in the near term is clearly guesswork. I was even looking at a Bank of America report earlier this week where they were, it was Deutsche Bank. They were interviewing in a survey all their clients, and overall, most people thought Bitcoin was going to go down by the end of the year, but it was a very big split between the under 35s, who all thought Bitcoin would be way higher by the end of the year, and the 55 and older, who all thought Bitcoin was going to be much lower. So, what I think about this is a lot of the day-to-day, week-to-week, month-to-month is clearly guesswork without a lot of knowledge in where we're headed. But when you go and zoom out, there is a real binary outcome with Bitcoin. It is either going to fail miserably and be basically worth zero in terms of it ever having real adoption as a currency or as a global store of value. I think that's a very low probability based on the last 12 years, but that's one outcome. And the other outcome is that this really does become a global currency and a global store of value, in which case, we're probably talking about $500,000 per Bitcoin, in line with anything from gold to fiat currency total market cap. And everything in between along that path is a lot of guesswork in terms of how fast it takes to get there and why we get there.
There has been some talk or speculation that, as cryptocurrencies increase in adoption, it may not be Bitcoin. It could be Ethereum. It could be some other yet to be created coin, and Bitcoin could end up like the MySpace or the Yahoo, AOL of our Web3 generation. Not that, very skeptical of that, but it's been speculated.
I mean, I've heard that too, and I think it comes down to a lot of investors and a lot of people in this space are trying to create the same narrative for every digital asset, and the reality is it's just not true, right? Bitcoin has a brand as a store of value and as potentially money. Ethereum has a different brand, right? That is about being a supercomputer or about being effectively an app store that anybody can build their apps upon. A gaming token has a very different narrative. A DeFi protocol has a very different narrative. We don't have to try to wedge all of these digital assets into the same conclusion, right? In a lot of ways, and I say this all the time, you would never say ETFs are lower, because the next question, well, which type of ETF is lower? Is it a healthcare stock ETF or a bond ETF or a gold ETF, right? The ETFs are different, and the digital assets are different as well. Not every single one of them is competing to be a store of value or a form of money. The rest of them are really more like quasi-equities, and they have different drivers and different factors.
Speaking of which, Jeff, you tweeted out a chart on the first 10-day returns of each month and focused on the largest token from several corners of the crypto industry. You say all indications from OTC desks and funds suggest another record month of inflows. But I'm looking at this chart and I see negative flows of Bitcoin and Uniswap, though Ethereum, though, is taking off. So are your clients, are you seeing them expressing concerns or having, a preference toward one coin or another?
They're definitely starting to be much more sophisticated in terms of what they're interested in. We run actively managed funds here, so for the most part, our investors are trusting us to allocate accordingly to the different sectors and the different token types rather than the investors doing it themselves. But there is definitely clear biases and clear prejudices towards the different tokens and what they do. What I think is interesting about that table, though, and actually you don't have the other 20 days of the month, but for the other 20 days of each of the months, token prices were considerably lower relative to the first 10 days. And to me, what that is indicative of is the institutional money that is coming in. We've been talking about the flow of institutional funds for a long time. Well, institutional funds, for the most part, allocate at the beginning of the month, which means if you're a fund manager like ourselves or another fund manager, you're largely deploying new capital in the first part of the month. And that's what we're seeing here over the last 6-7 months of price gains always happening in the first 10 days or so. New money is coming in, and it's not stopping because of price volatility. It's just continuing to come in, and we'll figure out over time where that money is going into. Is it going into DeFi, or is it going into Ethereum, or gaming, or NFTs, or Bitcoin? But the flows are definitely heading into this space, and that's not going to stop because we have a very low rate environment. We have the multi-year lows in the dollar. and there's nowhere else to put your money. That's why you see record balances of Tether and USDC sitting on exchanges. That's why we see record money market funds right now. There's just cash everywhere and nowhere to put it, and it's not going to stop coming into this market. Specifically to Bitcoin or other places, though, that depends on where the fundamentals are. And right now, there's a lot more positive catalysts happening around Ethereum and DeFi than there is around Bitcoin.